Hello and welcome to the Startup and Career Show. I'm your host Rushabh in conversation with Vatsal Kanakiya, co-founder and CTO at 100x.vc, India's first VC fund to invest in early stage startups using iSAFE notes. He'll be sharing insights on investment thesis of 100x.vc and how they help startups in scaling from 0 to 1. A very warm welcome, Vatsal. Glad to have you on the show today.
Thank you so much, Rushabh, and glad to be here on the Startups and Career Show. Excited to speak with you.
Great. So, Vatsal, kindly let us know about your journey so far as a tech-focused investor. How did you start your journey as an investor, and also about your work at 100x.vc and maybe a brief about Meta Ventures as well, since you're also associated with them?
Sure. So, I was an engineering undergrad from here in Bombay, and then post-engineering knew I wanted to do something which is more multidisciplinary, right? Where while I still love to code and still love to build stuff, I never wanted to be pigeonholed as okay, this guy's a front end dev or a back end dev or a full stack dev or a machine learning engineer or a deep learning expert or whatever it is, right? I always wanted to put my hands in multiple bowls and be more of a generalist. So out of college was looking for opportunities where I can be generalist. That's where kind of I realized venture is a career option, which I did not know during college. So after graduating, I'd worked in the past at Morgan Stanley and MIT Media Labs in tech roles, and then decided to do this kind of a more of a multidisciplinary role. That's where interned at a couple angel networks, learned the ropes there of the business, how things go, how things work, and then joined my family office. Meta Ventures is basically my family office, along with my my uncle Sanjay and my cousin Harshal. So, we started investing in India, but Harshal was also setting up a US base for the family. So that's where I went to the US, and just kind of built a base over there, built a network of investors, startups, whatever it is in terms of the startup ecosystem that you do. So that's basically what I had been doing for the first year odd in my career in venture. And I was like, I couldn't understand it. I'm like, why is this I get the point of, okay, this is multidisciplinary, right? Okay, I get to study multiple fields. One day I'm looking and evaluating a biotech startup. The next day I'm evaluating a SaaS startup. Third day I'm evaluating a manufacturing startup or an, electric aeroplane startup. So the range always excited me, but beyond that, it felt like, okay, this doesn't seem very productive, right? Paisa se paisa banana, right? Making money from money doesn't make sense. And I couldn't understand the business of venture back then. It's like, okay, I'm just buying a share at 10 rupees and selling it off at 100x. What's the productivity we're adding to the world here? That's where then, my uncle Sanjay kind of roped me into 100x VC, saying, okay, join as the CTO, help us evaluate tech companies, help the tech companies build their products out early on, and then over time you can kind of move into an investing role, which I did. But it's when I saw 100x and when I started working with companies from 100x, you actually understand the purpose of the business of venture, right? Which is to help build businesses from the ground up. We can talk about that more, but yeah, that's broadly been my journey. So started as an engineer, worked in tech roles, moved into investing for the family office, and then moved into 100x and been with 100x ever since.
Wow, this is interesting. Vatsal, the fact that you coming from an engineering background and completely focused on investment now, right? So to speak. Interesting.
Absolutely.
Yeah, but Vatsal, coming to 100x.vc, since you are the only one doing iSafe notes in India, wanted to know what is iSafe and how is it different from safe instruments which are being used, especially in the US?
Gotcha. Yeah. So, basically, just to give a brief on 100x, right? I missed it earlier. We're first check investors. We invest the first check in pre-seed, seed stage, bootstrap startups, right? So, come in very early, idea stage and up, into startups, write the first check, work with them to build the company out, and then help them raise follow-on rounds of funding. Basically, pre 2019, there was no concept of safes in India. In fact, that was one of my key learnings being in the US and building up the base in the US was that fundraising is just so simple and founder friendly there and quick, most importantly. And that's how it should be at the earliest stages because there is no value to protect, right? The whole point of these shareholder agreements, etc., that investors do, they're needed at a certain stage because there's value to protect, right? You have certain vested interests. So you're going to take a board seat, you're going to take voting rights, put option, drag along, tag along, row for, so that your value gets protected. At the earliest stages, when it's the first check, the company is basically zero, whatever price you say. So taking all those rights, etc., really doesn't make any sense, right? And because if you're negotiating for those rights as an investor at that stage, then you're probably taking up 3 months, 5 months, 6 months of the founder's time before the money can actually hit the bank. And that hurts the founders, right? Because their pace, their momentum, everything gets lost. And in the US, you see safe, sign today and money in the bank tomorrow kind of thing, right? It's that quick. So 100x wanted to bring that model to India, right? Saying, okay, early stage investors, especially us and angels, who are coming in so early that there is no value creation, should ideally be investing quickly and with minimal rights, right? So that founders can leverage the money and keep executing and building the business rather than thinking about what rights do I have, what's my cap table, this, that, all that, right? So that's when we created the iSAFE, right? Which is the Indian equivalent of the SAFE. So it's the same thing. The concept broadly is the same thing as the Y Combinator SAFE in the US. It's a simple agreement for future equity. The difference being it complies with Indian laws, obviously. So in the US, for example, the SAFE would just be a document and you sign it and wire the money. Unfortunately, in India, that would not be a legal document. You can't do that. I mean, don't quote me on this. I'm not an expert, but broadly, that's what it is. You can't do it that way in transactions in India. So what you have to do is we still buy CCPS or compulsorily convertible preference share. That's the SAFE is still structured in form of CCPS, but you take out the whole process of SSA, share subscription agreement, share purchase agreement, all of that goes away. And it's a standard 5-page document with no rights given to investors, right? So board seat, voting rights, put option, tag along, row for, all of that goes away. You get a standard lick pref 1x and a certain few consent rights and information, right? That's broadly it, right? So you can sign the iSafe and get money in the bank immediately. It does take about a 4-week process from going to iSafe, going from iSafe to kind of money in the bank, because of certain regulations, obviously in India, which you have to follow. But it's still a lot faster than an SHA or an S whatever, right? That whole process, which can take 3 months, 6 months, 9 months to get money in the bank, right? So yeah, that's broadly what the SAFE is.
Wow, that's
The
interesting.
iSafe.
And
Yeah.
that's interesting. And since you're the only one doing this in India, and that too at a scale, right? So this is quite phenomenal, Vatsal. But tell me,
Actually, interestingly enough, while we've invested in 130 companies through the SAFE, now all the angels that invest in 100x, I mean, there have been more than 800, 900 angel investments, or even more probably. I'm not sure. We stopped counting a while back into 100x portcos. All of them have come through SAFE notes only. Almost on a daily basis, we get 10 to 15 queries on the SAFE on email saying, how do we execute? We're executing this to raise from angels in our company, from other angels who are not 100x, this is not 100x companies, right? So the adoption across the ecosystem is happening and it's there kind of thing. So Yeah, it's pretty good to see. I think regardless of the outcome with 100x, whether we last the test of time or not, I think it's a broad positive that the SAFE should last in India.
Absolutely. But this is quite interesting, Vatsal, and since this phenomena is only building up, right? So you'll be feeling proud that when you went to the US, you saw the safe concept, you brought it back in India in an Indianized version. It's not that one size fits all, right? So you converted it with suits to Indian market, so to speak, and then now everybody's starting using it. That's interesting.
Yeah.
But Vatsal, while I was also going through the various investment that 100x has done. So got to know that earlier you guys used to invest around 25 lakhs, right? And now you've increased that to around 1 crore 25 lakhs for a 15% stake. So wanted to understand what led you to increase the amount in the first place, and what is it that is driving this change?
Couple factors. When we did it last year, we figured giving a larger check always helps companies because it gives them more time to figure out their business. They're not constantly on the run trying to raise more and more money because they have enough to last. And in India, 1 crore 25 lakhs goes a long way, like easily 12, 15 months. Many of our companies lasted 12 months on a 25 lakh check. So you can imagine, how long a 1 crore 25 lakh check can go for those who want to make it work. But the idea was to give companies more flexibility to, experiment, to figure out what they want to do. And that gives them time, right? Having more capital in the bank. And second is, if they have figured out, then to also use some of the capital or for growth, right? So that they are able to showcase better numbers, better outcomes to follow on investors, and consume more capital over time. So broadly, that was the idea, that we believe it's never a bad idea to capitalize a company well, right? Company money in the bank is much better, especially at the early stages when you're figuring things out. There are multiple ways to claw back on equity in the future once you have something of value. But initial days, may having cash in the bank is the most important thing. So that was kind of the idea, saying, okay, if we're writing a larger check, that helps companies, stay in the game longer and figure their things out longer and better.
That's quite incredible, Vatsal, because this also shows your confidence as an investor, right? That now you've done so many deals, you're more bullish on the Indian startup ecosystem as well, right? Now that you're signing much bigger checks than what it used to be earlier. That's incredible. But Vatsal, it seems you guys are on a fire, and racing against time, because you've already done around 130 investments, and now you're aspiring to have 100 investments in early stage startups every year. So can you talk about it? How do you plan to achieve that? Because that's quite a phenomenal jump that you're targeting.
Yeah, so that's been kind of our goal from day one. We believe there is enough depth in the Indian market. So, one of our core missions is to make sure each and every company that deserves capital should get it. Right. And unfortunately, the situation in India is where there's just not enough capital for everybody, right? We're still a growing ecosystem. There are so many startups coming up every day, so many founders. For follow-on investors, it's very tough. For angels, for VCs, for anybody, it's very tough to find signal in this noise, right? Because there's so many deals. So they're unfortunately forced to look at signals which are very reductive, right? Okay, एक college से है या फिर some background, some pedigree, whatever, right? Which may not necessarily showcase merit. So the idea here is, the more we're able to invest, the more we're able to bring out those diamonds in the rough, right? Saying that these companies which might not have had exposure earlier are now exposed to the market, and we can showcase, given our history, given our background, that there is credibility in this startup, right? That is kind of the idea here. For example, we've invested in 17, 18-year-old founders. We've reinvested in them as well. If their first companies unfortunately not worked out, we've reinvested in their second company because we believe in the founders. We've invested in founders who are 20-year-olds and dropouts. We've invested in 35 years or 40-year-olds who are at the peak of their careers and taking a bet. We've invested in companies from Mumbai, Bangalore, Delhi, yes, but also from Indore, from Calicut, from Kolkata, and just across the country, Bhopal, right? For us, nothing matters except is there a good business being built and are these good founders? And so we look at each and every deal that comes in. We saw almost 20,000 startups a year. We look at each and every one on equal merit, right? The idea is if it's a good business and if it's good founders, we're going to have a chat and we're going to try to invest. So that's kind of the idea when we ramp up to 100 a year. The idea is to, enable more access to capital for more and more startups and bring out more diamonds in the rough. But we're obviously doing this in a planned manner, right? That's kind of the end goal for us, a target for us. But you have to do it in a planned manner because you do not want to ruin the experience of working with 100x at scale, right? If after a certain scale it becomes like, okay, founders don't get to work with us or don't get enough insight out of us, then it's a moot point, right? There's no point in doing all of this. So we're scaling, but in a planned manner to ensure that our quality, both of the startups we invest in and the quality of experience they have with us, stay steady.
Oh, absolutely. That's very important, especially since you guys invest in the early stage itself. So founders also need more of guidance and mentoring as well. So completely agree on that. But Vatsal, tell me, what are the industries that 100x invest in? Are there any specific areas that you guys prefer, or you are more diverse?
We're actually sector agnostic as it happens. And, we've invested from consumer brands like Kerala Banana Chips to deep tech companies like Accu Robotics. It's a robotics startup. We've done a Think Metal, which is like a 3D printer for metal. We've invested in AI, generative AI, way before it was a thing. We've invested in a company called Vodex, in Vitra AI, in Group AI. So, it's a fairly broad range, I would say. We do have a bias towards tech-driven companies to some extent. That obviously comes from the fact that we have an internal CTO who can evaluate and understand tech, right? That's kind of the benefit of being at 100x, is that we're able to understand tech much better internally, right? Because of our expertise, and hence we're able to guide founders much better in terms of how to communicate, how to build the business out. When they're only, founders always think in tech terms, right? They're thinking, I have so and so product, these are the features, it's so cool, but you have to translate that into business, right? So how do you do that is something one of our strengths. But yeah, we're completely sector agnostic though. And like I said, we've invested in a really broad spectrum of companies across sectors. Right now, if I were to say some sectors that we're really excited about, SaaS is superb. We're looking heavily into payments. We're looking into healthcare a lot. Anything rental subscriptions on the consumer front, we're excited. Those are a few that come to the top of our head. We have a clear thesis on community-led startups. You can read my blog on it on my LinkedIn. We have a thesis on Web3 companies, also put out on our blog. A thesis on generative AI, which is coming soon. So across the board, we do have a lot of theses. So you can just check out our websites or my blogs and stuff.
Surely, Vatsal. But since you handhold these startups and take them from 0 to 1, can you talk about your cohort-based investment mechanism that you guys follow? Because I believe Class 9 is going on while Class 10 applications are also open. So do startups need to apply for these? How does the enrollment mechanism work?
Yeah, so the model is fairly simple now. There's just a single form on our website. It's a Class 10 application form karke hai. You fill it up. It takes about 20-25 minutes of your time to prepare the data. You can actually save it and come back to it later as well. We made it very easy for founders to fill it up. Once you filled it up, roughly within under 7 days. Currently, our rate is 1 to 2 days, but we say broader, within 7 days, you get a response, positive or negative. If it's a positive, we invite you to have a couple meetings of us, and within generally 2 to 3 meetings, we're able to close with a term sheet. So process doesn't take more than 2 to 3 weeks from the term sheet, from the application point of view. So it's fairly quick. Once the term sheet happens, it takes about 4 odd weeks to do the due diligence, get you ready to sign the iSAFE and everything. At which point we sign the iSAFE, we wire the money, start working with you. What happens is, like you described, Rushabh, we invest in a cohort-based model, or we call it a class, right? So every class, we have a certain number of companies, 20 to 25 odd generally right now, where the way it works is once that cohort is kind of built out, we invite them all to Bombay and we work closely with them in person. So during this period, the 100x team is working with each one on a personalized level to help them shape the business out. B, we invite experts, entrepreneurs, VCs, founders, operators who've been there, done that, to kind of help founders learn from them, industry experts, whoever, right? And then third, there's a bunch of peer learning that happens, right? Because you are within other 20, 25 startups along with yourself, you learn so much from other founders. So within this kind of 1 month period, founders are just reshaped heavily. And then they're kind of ready to raise more capital and scale up. And that's where we host an event called the VC Pitch Day, which is where we showcase our portfolios to a network of angels, VCs, family offices, corporate VCs, etc. That's where then they raise their next large round of funding. So that's kind of broadly how it goes, Rishabh.
Got it. Got it. But that's quite interesting. Vatsal, since you mentioned that you get thousands of applications, where people just upload through a simple form. But can you tell us how many startups are included in one cohort, right? And more importantly, what is the shortlisting mechanism? You said around 2025 are part of it. But how do you shortlist out of 20,000 applicants? How do you shortlist these many startups?
So we write this on our website, right? And there's actually a whole blog you can read. I've written what makes a company venture fundable, and I would highly recommend. But broadly, the idea is we look at 4 things, right? 5 things, forgive me. We look for a great market. There has to be space in the market. It should be a large, fast-growing market. A team that showcases that it can execute and has domain expertise to some level. We look for a business model that can scale and actually make money at scale. We look for a product which has some sort of USP, some sort of moat to it, right? Which allows it to be defensible. And the last being an internal conviction that, this can go really big, right? Okay, if there is an outcome here, it's a 20x, 50x, 100x, 200x outcome. And, that's basically driven by venture economics. And again, you can read my blog on it. But yeah, those are the broad 5 things we ask ourselves, right? In the end, any investor is trying to answer 3 questions. One being, is there money to be made? How much money is there to be made? And will these guys make me money? Those are the only 3 questions an investor wants to answer. So if you get answers to that through the pitch, through everything, then you're like, okay, this is good to go.
Absolutely, absolutely. But Vatsal, I think the good part, what you mentioned, is that you also guys respond immediately to the founders. You don't keep them hanging, right? Whether they are selected or no. So tell me, if a startup applied for a class and didn't get selected, right, due to whatever reasons, so are they allowed to reapply for the next class whenever you have it again? Yeah.
Absolutely. And this has happened multiple times where we've evaluated for a class, we ended up saying, okay, this might be early, or we give them some feedback saying this is where our contentions are. They work on it, they come back and we're like, okay, this is a new team. This is a, fresh startup and we should take a call. So happened multiple times where a startup has applied first. Unfortunately, we were unable to work with them, but they worked on our feedback, kept us updated on how they're building the business. And then we were just blown away. I think that's why we kind of recommend companies to apply to us regardless of their stage, because you're never going to have a perfect business. You never know if you have a perfect business, ki mero abhi funding milega ki nahi, if I'll get funding now or not. But what happens is if you applied and there is something of value there, or anything there is, we'll give you some feedback, some guidance, whatever it is, right? And then a relationship can be built between the founder and the investor. And because over a few months there are multiple points of communication exchanged, by the end we know okay, this is a founder we can trust. There's somebody we've built a relation with. Plus, we've seen the journey and we believe they're on the right track. And hence we can take a call and take a bet kind of thing, right? So yeah, but it does happen where they've applied for a particular class and then they've reapplied for a future class and we've taken them multiple times.
Got it. Got it. Oh, that's pretty interesting. But Vatsal, once a startup is enrolled into a class, what support do you guys provide? You did mention that you guys call them everybody to Mumbai, spend about a month where do cover various sessions. So is it that somebody who gets enrolled into your cohort, the chances of them increasing the follow-up rounding also, follow-up rounds also increases big time within a span of a few months instead of waiting for a year or so? So how does that mentoring happen, and how does 100x help?
Yeah, so we work with, so again, it is fairly personalized. Depends on company to company basis and where they want to draw value from us. But we work with founders across the board, from marketing, positioning, GTM, strategy, pricing, persona, to financials, fundraising, pricing. I'm sorry, I repeated that. Product, tech, how to build, what features to prioritize first, what tech architecture to use, how to ship really quickly, who are the right customers, who are the wrong customers, that whole front, right, kind of thing. And on top of that, our network also comes in very valuable, right? So we have a large network of CXOs across India Inc., right? And even at the startup levels, lots of connects. So especially for B2B companies where they would want to have either B2B sales or partnerships with other companies, our ability to open doors for them is very high. So those are a few fronts on which we kind of help them build the business out. And on the fundraising front, we kind of help them figure out the narrative, what are the strengths, what are the weaknesses, how to position themselves, how to tell the right story. Because you may have all the pieces in place, but unless you tell the right story, the investor is not really going to understand. So you have to tell the right story. And then we set them free. We give them access to thousands of investors all at once through the pitch day. And presuming everything goes well, they end up raising their follow-on round of funding there.
Wow, that's interesting. So in a general setup, when does the pitch day comes? Once they join the class?
Depends on every cohort. Currently, we're doing it around every 6 months or so. So we had one in Jan. We'll be having the next one soon.
So what it means is you're not only fastening the process for early stage investments, but you're also technically fastening the process for next round of investment as well for startups, right?
Yep.
So this is a great value add in that sense. Absolutely. So, tell me one thing, Vatsal, now that you've also increased the, ticket size of investment. So does 100x also do a follow-up round, or you only facilitate the next round of funding from other VCs?
We don't. So we are very clear. We want to dominate the first check and, only focus on that. Everything else would be a distraction at this point, right? We want to make sure the experience of raising the first check from us is optimal. And adding anything like a follow-on round or anything would probably be poor signaling for the company, right? Okay, why did we invest in this company and not in that company? And it mucks up the whole model. So the idea is to be very focused, just write the first check, and make sure we're very good at writing first checks, right? Writing the seed check. That is what we want to be the best at when we want to dominate that market.
Got it. But you guys stay invested during the follow-up rounds, or you try to exit completely?
Yeah. Obviously, it is subjective on company to company basis when we do look for an exit, when we don't look for an exit. But as is general, I think most funds start looking for an exit around year 5, year 7. So that is the broad. It's not like we start chasing exits immediately or start pressuring the founders. Okay, day one से कि अरे अभी exit दिला दो, ऐसा नहीं होता है. We tend to be patient capital, and it's obviously subjective, like I said, on when we may want to exit a particular company. Some companies we may want to ride it out until the IPO. Some companies it may be better for us to, exit earlier, kind of thing.
True, true. But Vatsal, can you talk about the startups which were part of your earlier cohorts? If they were somehow unable to raise next round of funding, what role does 100x play there? Does the mentoring still continue after the class is over?
So we have an alumni group, 100x alumni group. So founders from the earliest classes whose companies unfortunately did not work out are still part of the group. They still have access to us on WhatsApp, on email, on call, anytime. Once you've been invested in by 100x, you're part of the 100x alumni community, right? And so we're always available, whether for your current business, whether for your next business, always happy to have a chat. That is part of what we do, right? So yeah, we still keep working with founders even if a fundraise doesn't happen. We try to help them figure out stories, narratives, or shifts in product business which would help them potentially, raise capital or scale further. But unfortunately, if it doesn't work out, we understand, right? Our thesis has always been it's okay to quit, right? Better than being in a living dead business and wasting years and years of your careers, right? Of your productive years on something that is going nowhere.
True.
Go for all or nothing kind of thing, right? And that's what we obviously an outcome is always the best case, but we understand that's not. And one thing we understand as an internal philosophy is the founder never fails. It's the idea that may fail, right? Saying, okay, yeah, the product didn't work out, the market wasn't there, maybe whatever, right? Retrospectively. But we generally believe that the founder has given their 100%. And as long as the founder has given their 100%, we have no qualms, right? So that's where it is.
Absolutely. Absolutely. Vatsal, moving on, can you talk about the startup ecosystem in India, since you guys evaluate so many deals, and India being an investment destination from a startup standpoint? Maybe briefly, if you can throw some light.
Oh, it's a there's been enough and more said about India as a startup ecosystem. We're big bulls on India. We invest only in Indian startups. Whether they're building for the world, whether for India, that's not relevant to us. Only thing is we invest in an India domicile company, but with Indian founders. But the idea here is, founders are getting smarter day by day. There is more and more global exposure for Indians day by day. Our understanding of global problems is extremely good. Our technical capabilities to bridge the gap between the problem and the solution exists. So largely very bullish. There are so many quality companies being built every day out of India, that I'm super excited to see the next decade come through. And I'm extremely excited for when more and more Gen Alpha entrepreneurs come into the fray, because Gen Alpha is post 2010, because those founders have grown up, those kids who are now 13, 14, right, kind of thing. So maybe 5 more years before they're starting up. So they've grown up in a world where they have never not seen mobile phones or the internet. At a Gen Z level, you might still be in the transition phase, but at Gen Alpha level, you're like, mobiles have been around for your whole life. The internet has been around. The startup culture, they've been born in 2010s when the startup culture actually started.
Yeah.
So startup culture has been around all their life. And their attitude and their mindset is going to be so different, and the kind of businesses they will build, I'm so excited to see how it turns out.
Wow, awesome. But Vatsal, people are talking about funding winter, right? And 100x.vc is in a different tangent, it seems. So what are your views on that?
Cycles come and go. Um, at the earliest stages, anyway, you're playing on a 5, 7, 10-year timeline. So short-term 2, 3-year cycles don't affect you as much. As long as it's a quality company, there will always be capital for you.
True.
Yes, there is a funding winter. Yes, there's lesser capital, but that only means that the companies that may not be as high quality will be weaned out. But maybe that's better for the entrepreneur and the ecosystem as well, right? It's more efficient use of capital. And for the entrepreneur, it gives them an earlier out saying that, all right, things didn't work out, on to my next thing, something that can work out, rather than spending 11 years to figure out that, things didn't work out. Now, maybe within 5-year journey, they'll figure out, all right, this is not working out. I'm not able to raise more capital, which obviously I can imagine how I can empathize how hard it is. But in the broader scheme of things, I think it's better for the founders, right? Kind of thing in that sense. So.
But I think it's been great to speaking to you, Vatsal. But before you leave, any last piece of advice you want to give to these early stage founders who will be listening to this conversation later?
I think the only thing I will say is be laser sharp in your approach. Have a laser sharp hypothesis and laser sharp product, laser sharp target customer, laser sharp go to market, laser sharp pricing. What is sexy to investors is a clear and focused hypothesis. Whether it turns out right or wrong is up to luck and chance and markets, right? But having a focused hypothesis gives investors the confidence that, hey, this guy or this person knows where they want to spend the capital, and they're not going to be all over, right? They have a really thought out plan and a mindset to have focused execution. So that's kind of the only thing I'll say.
True. But on that note, thank you, Vatsal, for taking out time today with us. I think you're doing some fab work for the Indian startup ecosystem, and we wish you all the best for achieving 100 startup investments a year. I hope you do it pretty soon. And it was great speaking to you all through.
Thank you so much, Rishabh. It was a pleasure being here on the Startups and Career Show. Hope I'll be here soon.
Absolutely. I look forward to having you again once you hit the target of 100 startups every year. That's a big target to have for sure. And I look forward for that.
All right. Thanks, Rishabh.
Great. So to all our listeners, thank you guys for joining us today. We continue on our mission of bringing more such real life conversations for all of you. Goodbye, guys. Signing off for now.